Hello, and thank you for joining us today. My name is Timothy Lee, and I'm a research analyst at Red Cloud Securities, and I'm delighted to host this timely Red Cloud webinar on silver exploration and development in Bolivia today. My special guest today is Andrew Williams, CEO and Director of New Pacific Metals Corporation.
Hi, Tim.
Yes, hello, Andrew. During today's webinar, Andrew will provide an overview of the company's achievements to date and give an outlook for plans in the coming year. And then we will take questions. You can type your questions into the chat box at any time, and we will get to as many as we can. Before we kick things off, let's discuss a little bit of fine print. During this New Pacific Metals webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined in the New Pacific corporate presentation, and this can be found on the company's website, newpacificmetals.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures pertaining to New Pacific. And now I'm delighted to introduce Andrew Williams, who will present the New Pacific story. New Pacific has not one, but three high-quality projects in Bolivia. The most advanced is its world-class silver sand project, for which the company reported a robust pre-feasibility study yesterday. Silver most often occurs with other metals, but it's notable that this project is pure silver and stands out in that way. As well, the company has its polymetallic Carangas project, where it's working toward a PEA, and the exploration stage Silver Strike project, which has had some exciting drilling results. As well, this webinar is timely as Bolivia has been in the news headlines over the past 24 hours, and no doubt we will have some questions about the country and what is going on there. So without further ado, I'd like to turn it over to Andrew, who will update you on New Pacific.
Great. Well, thank you, Tim, and thanks to everyone on the line for joining us today. I was going to give you guys a more of an update presentation centered around our recently released pre-feasibility study rather than our traditional marketing deck, thinking that would be useful. And then hopefully we'll have plenty of time for question and answers afterwards. So as Tim noted, I will be making forward-looking statements during this presentation. So just a brief overview of Bolivia, again, being topical. It's where we have 100% of our operations. And we're really proud to call it our home, despite what we've seen in the headlines recently. I think if you take a long view of history, it's a country that's birthed three wonderful silver mines over the last couple of decades in the last cycle that are still operating today: San Cristobal, San Vicente, San Bartolome. In fact, San Vicente being operated by Pan American Silver, they like the country so much that they've become a major investor in our company and continue to support us as we move our projects forward. Bolivia is also unquestionably silver country. It's the fifth largest silver producer globally. They produced over 40 million ounces of silver in 2023. And the other point that I like to talk about is being a mining country. That means we can get the job done with skilled labor at low cost. So our all-in historical drilling costs are about US $220 a meter. That's everything in there. That includes some like head office allocations from our vice president of exploration, and so I think those are some of the most competitive drilling costs anywhere in the world, and speaks to the ability to get things done and operate successfully in Bolivia. And then just a couple other points I'll share to give you a broader overview of the country. It's got the world's largest lithium resources, 23 million tons, and the development push to monetize those lithium resources is well underway in the country as part of a broader wave of economic development that the current economic situation is necessitating, of which we are certainly part of that wave, and expect that to be a positive tailwind for us as we continue to advance our projects forward. And then again, being a mining country, mining makes up almost half of the country's exports. So really meaningful part of Bolivia is mining. So looking at silver sand, this was what was in the news yesterday. We're very proud to release our pre-feasibility study. But if we step back, so now at our silver sand project, we've made first the discovery. That was the really hard part that took about 5 years worth of work from 2017 to 2022 as we drilled the project. And then last year, PEA, and then just yesterday, we published our pre-feasibility study, once again demonstrating very strong economics. And so where we're at today is we're continuing to advance with our community engagement and environmental licensing. And then looking ahead, our next major milestones will be to actually obtain our environmental license and complete some further technical evaluation as needed. So looking at the silver sand resource on the left, and very proudly the reserve on the right. So within the resource of 200 million ounces of silver in the measured and indicated category, we converted almost all of that to the reserve status. So 175 million ounces of silver reserves at a diluted head grade of 105 grams per ton silver. So for an open pit mine, very strong grades. If you looked at it on a gold equivalent basis, it'd be sort of 1.3, 1.4 grams per ton gold. That'd be probably 40 to 50% higher grade than the average open pit gold mine that's coming online today. So makes very good intuitive sense why the numbers that I'll get to shortly came out so strong. And I won't take you through all these names, but certainly it wasn't just us doing the pre-feasibility work. It was a team effort, and it was the effort of the consultants. Ultimately, this is their study that they signed off on as independents. Some very good technical support that we had working with us, and very proud of the product that the collective team accomplished for us. Looking at the highlights of the PFS, so the headline number, $740 million net present value. That's at $24 an ounce silver. Now, if we looked at the project on an apples-to-apples basis with the PEA at $22.50 silver, the NPV came in at $638 million, slightly down from where we were in the PEA study. Again, kind of, I think, part of the natural course of things as engineering assumptions get refined, and I can talk to that further on in this session, but still very much a robust result. And at the $24 silver price that we used as part of this study, it was a 37% IRR. The initial capital cost, still very much a manageable $358 million, and sustaining capex of about $85 million of over the life of mine. And so when you run that through the cost model, we're just over, just a shade under $11 an ounce, all-in sustaining cost, roughly almost a third of where the current spot price is today. So still going to deliver very healthy margins. And then importantly, the payback period stayed under 2 years as we've got that high grade core that we get into early on in the mine plan. And that was still very much a key feature of the pre-feasibility study. And just looking at some of the more technical nitty gritty in there. So 52 million tons, 3.3 to 1 strip. That strip ratio came down somewhat from the PEA study, where we had some additional waste tons that were allocated in the operating early years of the PEA that we moved to the pre-production phase. So that dropped our operating strip ratio down a little bit, and the offset was that contributed to our increased capital costs. Same processing rate, relatively similar head grade. The recoveries came down a touch from 91 to 90 based on some additional testing that we did, but the offset to that was that our cyanide consumption also came down, and so as a result we were able to still have a very good all-in sustaining cost. 13 years, I think the mine life came down a year. We decided to strip out some small satellite pits from in and around the core area to simplify the mine plan, and importantly we still got that front-end loaded production profile. So 15 million ounces of silver a year in each of those first 3 years. So very, very strong result here as from the PFS. And then just zooming in on the capital cost. So that came up from 308 million to 358 million, which is still very much a competitive number in the industry. And I think there's really three main advantages that our silver sand project has that help keep those numbers in that financeable range. The first that I'll flag, it's not specific to this project, but we did go with a contract mining option. There's a existing contractor that has operations in Bolivia that have very competitive rates, and so and they've got a good operating history, and so we've decided to go with the contract mining option as we did in the PEA, and that eliminates the need to procure a mining fleet and also incur the ongoing sustaining capital over the mine life for the fleet replacement. So that would be the first point I'd flag. The second point is that we're going to connect to the electrical grid, and it's the grid runs about 30 kilometers south of where our project is, so it's a fairly non-invasive exercise to bring that power to site. And the power in Bolivia is about 5.5 cents a kilowatt hour, and so that helps keep both the capital cost and the operating cost down. And then lastly, we've got good access. So there's 2-lane paved government highway that runs 40 kilometers south of where our project is, and that road itself is currently being upgraded by the government. So we've got very good access in and out of the project. And so where those, if we look at the capital cost from the PEA compared to the PFS, that $50 million delta. So the biggest chunk of that, as I referred to earlier, came from us allocating some waste that was mined in the early years as operating costs from the PEA. We've pulled that forward into the pre-production phase for the PFS. After some more detailed mine scheduling, we realized that that additional material is needed to further bolster the waste rock and tailing storage facility. And then secondly, that additional metallurgical test work that we did revealed that we would benefit from having a slightly larger leaching circuit. And so that our residence time that we're targeting has increased from 48 hours in those tanks to 72 hours. And so to keep the throughput constant, we need to have a larger volume circulating within those leach circuits. And so that accounted for roughly the other $20 million of the change. But everything else kind of ebbed and flows, pluses and minuses, and we're happy with how things shook out. Just going back into some further details, I think a lot of this was covered on the previous slide, but I'll flag that our operating costs still coming in, including the tailings, at just under $14 a ton processed. Our G&A cost came down slightly, and that was a nice result of this access road that the government has been upgrading, and that's led us to have a smaller footprint at site, and our facilities will therefore require lower bodies at site that need to be housed and sheltered and fed, and the majority of our workforce is going to be shuttled in on that road every day, which reduces the cost that the mine has to carry as people get to spend the nights with their families. And then NPV post-tax, $740 million. The IRR post-tax, 37%. And this is a metric that I don't think gets enough attention in the industry, is the NPV to CapEx ratio. So again, putting up that $358 million of capital, getting $740 million of NPV, that's over 2 to 1. And so from an industry project perspective, a very efficient use of capital when stacked up against other projects in our industry. And then just looking at the sensitivities, the top table tells what is the most painfully obvious part of this, is that the project is hugely sensitive to the silver price. And we've chosen to keep our study cost low, so $24. It did tick up slightly, but at $24, still significantly below where the spot price is in and around today at $30. And if we look at that at $30, the silver sand project NPV is well over $1 billion with a 48% IRR. So certainly a very strong backdrop that the project is just into today, and as it goes into development, certainly a very good moment for silver developers such as ourselves. And I believe this is our last slide on the silver sand project, but this was our opportunity just to take a step back and think about where this project sits relative to other projects in the industry. And there aren't a heck of a lot of other undeveloped silver projects out there, but the top slide compares the Silver Sand project to 4 other projects that are either in the study phase or the construction phase. And we think that our project compares very well compared to the rest of them. In particular, you look at the capital intensity, the NPV relative to the CapEx at 2-to-1 versus the peer average being about 1. Certainly highlights the significance of our Silver Sand project. And if we broaden the lens somewhat and look at the Silver Sand project as a precious metals project and stack it up against 4 other projects that have either been recently acquired and or financed for development, and we certainly believe that Silver Sand punches very nicely in that weight class and competes very well with those other projects that garner significant attention and multiples in the marketplace. So I think this pre-feasibility study once again answers the question that Silver Sand is a truly important asset in our industry and is here to stay and will one day become a great mine in the ranks of these other projects. Now, just for the purpose of this webcast, I also want to brief you on our second project, Carangus, because Silver Sand, while it gets a lot of the attention, Carangus has been in the shadow of Silver Sand, and this year we're really trying to pull it out of that position. And so looking at what we've achieved in a very short amount of time, so 2021, when we acquired the project, we drilled 81,000 meters, 190 holes, and we published a resource estimate in September containing 200 million ounces of silver. And so where we're at right now is we're completing our preliminary economic assessment at the Carangus project that we're expecting to release in September of this year. So our engineering team has had their day to celebrate the Silver Sand press release, and they're obviously busy on getting the study out, and then their attention will again refocus in on getting this Carangus PEA study across the line, which will be an exciting milestone for us. And then in parallel, we're also well underway with kicking off our environmental licensing process at the Carangus project. So a little bit more about Carangus. It's a bigger land package than our Silver Sand project, 41 square kilometers. You can access it from Aurora, the closest industrial center, 200 kilometers along a paved highway, and then it's another 35 kilometers to site. So access into the project is excellent. You're about 270 kilometers out from the Carangus project along a paved highway to a port town in Chile. And the mineralization at Carangus is hosted within 3 separate domains driven by the temperature and pressure gradient of the system. The biggest and most important is the upper silver zone. There's about 150 million tons in that zone, containing at a rough grade of about 80 to 85 grams per ton on a silver equivalent basis, of which about 45 grams per ton is in the silver category alone. But what we're doing as part of our PEA study at Carangus is saying, well, that's great. We can create a very large NPV number if we take that full 250 million ton resource. But what we like so much about Silver Sand is its focus on high grades, high payback, and better margins. And so while Carangus is not going to replicate the blockbuster grades and that we have at our Silver Sand project, it's still going to be a very strong project. And the nice thing about it is that there's a nice continuous higher grade lens of mineralization that's in this the green color that's in the image. And within that, in the warmer red and orange colors, much higher grade mineralization close to surface that can be mined at a lower strip ratio. So we're really going to focus on that starter pit as part of our PEA concept. But importantly, that starter pit will also preserve the optionality of the much larger ore body that can be mined in subsequent expansions. So we're really excited to continue to make progress there. Our metallurgical testing is really the last key input to the PEA at Carangus, and we're hoping to cut that off at the end of this month. So we're just a few days away from having the data set that we'll need to really optimize and sink our teeth into putting the finished product together for September. And then lastly, even though we're not drilling today, I do like to make sure that we maintain our perspective on what Corangus is. So the Corangus deposit, as we know it, exists within a very large basin that we completed an IP survey on in 2023, and it flagged 6 different geophysical anomalies on the project, one of which is the only one that we've drilled. And so at some point in the near future, we'll look to get in and test those other 5 anomalies and see whether or not what we found is just scratching the surface in a much larger district at Corangus. And then just, I wanted to highlight this slide to folks. Just it's an observation that I've made over the years in this industry that, yes, the exploration companies get all the attention for being the big sexy. You go from 10 cents to $10, and that's what drives a lot of interest. But I've also observed that this sort of steady base of building value through project advancement successfully is another really great way to create value in our industry. And there's 5 great examples that have come to fruition over the last several years. And I just want to remind folks of the journey that we're on here. While we're not currently drilling, we certainly feel like we've got a good business plan to create that value through successful project development with both our technical studies, our permitting studies, and eventually financing and development. So to wrap it up for New Pacific, we certainly believe that we've got the right metal, silver. I don't need to go into extensive detail, but being the best electrical conductor of any element of the periodic table, silver is a critical metal for an electrifying world. And its dual role as a store of value, as a hard asset relative to fiat currencies, again, underpins a strong demand picture. And both the industrial and financial demand, we're currently in deficits greater than 200 million ounces of silver in the current environment. So very good backdrop. We've got the assets, 2 big discoveries made the old-fashioned way, in-house, greenfields exploration. Our silver sand projects got great economics that we've once again confirmed with this pre-feasibility study, and Corangus being a globally relevant deposit that we're looking to put some economic parameters around and show that it also has strong economics. And then being where we are in Bolivia, again, in light of recent news events, the big picture remains that this country's got a long history of silver mining, and we're located in 2 prolific mining provinces within the country, Potosi and Oruro, and the country is underexplored, and there's lots more room for additional discoveries. And we look at time, our assets, as the previous slide showed, we're at that inflection point where as we continue to advance the projects, we'll drive the value into our share price. And if you look around the industry, silver producers, they are struggling to replace depletion. I think a lot of the silver producers recently have forayed into gold, not because they're abandoning silver, but just it's so hard to find large-scale, high economic silver projects like what we've got at our silver sand project and soon to be at our Corangus project. And that is really the scarcity of these underdeveloped projects. And then people, our team, really, I take a lot of the attention on the screen, but we've got a wonderful team in Bolivia that is truly motivated and sees the development of these projects as being a meaningful experience for them in a country that needs the economic development. And so, I mean, I just came back from the country a couple weeks ago, a really good trip, and I always am energized by the energy and the enthusiasm that our team has towards bringing these projects forward. And then we do also have good backing as well from Silver Corp Metals and Pan American Silver, who are very important partners for us, both financially and from an intellectual horsepower perspective. So that's it for the formal presentation. I know we've got lots of time for question and answers, so I'm here, and please don't be shy. Ask away. I love getting your questions.
Great. Thank you, Andrew, for the very informative presentation. As Andrew mentioned, we'll now start the Q&A portion of the webinar. A reminder to everyone on the line that you can type your questions into the chat box at any time. We already do have a few questions. First, on the pre-fees, It does have a bit, not a big amount of CapEx increase compared to some projects out there going from study to study, but it does have a higher CapEx. And you had mentioned a couple of the reasons, in part because of the need for material for the tailings facility included. Was this a change in the plan for the tailings, or just a realization that you need more material up front for that?
Yeah, no, great question. And obviously, I'm a big fan of keeping the CapEx numbers down as low as possible as well. I think, no, there's no change in plan. It's not like we modified our factor of safety or we got new data. It was just really, a classic symptom of just doing the further detailed engineering, the further scheduling. Like, oh, yeah, shoot, we just need a little bit more material here than we thought, and then we run a more detailed schedule out on a more granular basis, and we need a little bit more material here. So I think it was just a casualty of the increasingly refined estimates as part of the pre-feasibility study relative to a PEA. I know we say it's sort of plus or minus whatever it is, 40% on the PEA, and this one kind of you flip the coin and it ended up turning up the other way, and so we had to do that pre-stripping a little earlier than we thought. I think so. The net result of it is that we're going to need to raise a little bit more capital up front to develop the project, but at the end of the day, I mean, this material was going to get mined in the early years of the mine plan anyway, so it really, other than a modest discounting effect from moving the costs forward a little bit, it doesn't really impact the NPV all that much. It just means that we need to raise a little bit more capital up front in order to do the work that we have to do for the tailings. And then, I mean, the same thing with the tanks. I'll just give you a little bit more color there, because between that pre-strip and the tanks, everything else kind of washed nicely, which we were proud of. But the tanks is kind of interesting because, again, it's this exercise of getting into greater detail, and as part of the PFS, what kicked that off was that we created a much more robust geological model for the metallurgy, and that told us that the percentage of the life of mine composite of ore feed, instead of having a certain amount of sulfide transitional oxide, there was a little bit more sulfide content in the geological model as we did the detailed analysis for the PFS than we had assumed in the PEA study. And so then we had this higher sulfide content composite that we used to complete our metallurgical testing for the pre-feasibility study. And then that's what gave us the additional data that told us that if we want to keep the recoveries at the 90% range, we would have to have larger leach tanks in order to keep the silver in the tanks for just a little bit longer, going from 48 hours to 72 hours. And so we had to have more tanks. That's bigger volumes, more steel. That was part of it. And then this is just, again, just anecdotally about how this stuff unravels, is that you have the bigger tanks, and then all of a sudden the supplier that we had previously got the quotes from in the PEA study was unable to supply that volume of a tank. And so then we had to go to a different supplier that actually had a higher per unit cost, but they were the only ones that were able to supply those tanks. So it kind of amplified the effect of the larger tanks. So again, similar to the or to the waste stripping, as we again get into the further details in those two instances, it revealed that there were some things that needed a little bit more care and attention, and unfortunately capital. But again, when you look at the result now, 358 million, we had that one comparison slide. I still think that we're very competitive relative to some of the peers out there, and in the grand scheme of things, it didn't affect the economics in a material way.
Great. Now, shifting focus a bit to the permitting and community relations side, what is the current status, or what are the steps for the EIA? And also looking at the surface access, whom do you have to negotiate with, and how is that process going, or what does that involve? Yeah, good. That's a great question. That's really where our focus is on, and will continue to be on, is on the permitting front. And I mean, there are various things that we need
for our permit, but really that community agreement, that the community agreement, which is really a surface access agreement, is the most important. And I would say that, again, our team's doing a really good job down there, continuing to deepen the relationships with the community members as we progress towards that agreement. There's about, in the main community where our project is, there's about 50 voting members within that community. And I mean, we know all of them. We've got relationships with them, and our team's done just a great job in building those relationships, explaining the project. It's a process that takes a long time to build trust and deliver the message that this is the development concept. This is an open pit mine using modern mining methods, and versus in Bolivia, it's a mining country. And yes, there are very successful, like San Cristobal being the flagship, open pit mines that have operated and are in operation. But I think more small scale artisanal mining is the more sort of culturally known way of mining in Bolivia, and we certainly deal with that at our Silver Sand project. And so, getting the community aligned around the concept of this large scale open pit mining operation that will create a pie that is so much bigger than what can be created through alternative development scenarios, is a process that takes time. But ultimately, they need to be comfortable with us and the development scenario in order to sign on the dotted line for the community agreement. And it's just unfortunately a process that takes a lot of time and a lot of trust building. And all I can say is that we have a very good team on the ground, both in La Paz and Potosí, that are doing a great job building those relationships. And I certainly expect that at some point in the not too distant future, we'll have a breakthrough. But that's really the key to it at this point. And then there's additional bits and pieces that we need as part of our application, but the material one is that surface access agreement, and all I can provide at this point is that we're continuing to make good progress.
Great, thank you. We do have a couple of questions on the corporate side overall. First, a question about what does your shareholder base look like, and do you have institutional ownership?
Yeah, we do. We've got, actually, I think that's one of the strengths of our company, is that we're really anchored by two large corporates. So Silver Corp Metals, they own about 27% of us, and Pan American Silver, they own about 11.5% of us. And then, so between those two, that's nearly 40% of the stock that's tied up in strategic hands that know the industry well. And in particular, Pan American Silver, they have operated in Bolivia for 25 years. They know the country. They're very bullish on Bolivia. And so we have that knowledge and experience to draw on, as well as having their financial support. They both backed us meaningfully in our last capital raise in September, where we raised Canadian $35 million. And then beyond that 40%, there's another, call it roughly 7%, that's owned by the company's founder, Rui Feng. And so you look at our register, and there's about 50% of that that's tied up in long-term sticky hands. And so our float is only about 50% of our shares outstanding, which means that our shares are rather volatile. But when you look at that and remaining 50%, yeah, we've got some blue chip specialist mining investors in there as institutional owners. We've got a very strong and supportive retail base that we're very proud of and very appreciative of. And maybe the last point that I'll flag is that, again, with the low free float, is over the last little while, we saw some pretty heavy selling pressure on our shares kind of late last year, early this year. And as far as the ownership goes, we were readjusted out of 3 different indices, ETFs, and there was about, I think it was 7 million shares that were released and had to find a new home. And so happy that those shares did find a home eventually, but it certainly caused some pressure on our shares. So when you look at, again, just going back to the question about the registry, I'd say probably 6 months ago, we would have had a decent chunk in there as well that was owned by passive robot ETFs and indices, but that number has come down significantly. And I also see that as an opportunity that as we continue to have success and grow, that that works the other way when it's time for us to get back into those. It certainly offers the fuel to the upside. So very good diverse base, corporates, founders, sticky hands, some solid institutional shareholders that specialize in the mining industry, and then a good supportive base of retail shareholders. So I think it's a source of strength for our company is our shareholder register.
Great. And another question on the corporate side, always popular. How much cash do you have on hand, and how far will that get you with your current plans?
Yeah, we had at the start of the year, we had about was it 25 million US from that raise. I think we were down to like 22 and change at the end of March. I think we foresee ourselves ending this year with around $15 million US in cash. So about a $10 million burn. A big chunk of that was the pre-feasibility study, the metallurgical test work that we completed for Silver Sand, the metallurgical test work that we're doing for our Carangas project, the PEA study that we're doing on our Carangas project, some permitting work that we're doing at both our projects, collecting baseline data and the like. So we think that we'll end the year with about 15 million US, and we'll have a pre-feasibility study on Silver Sand. We'll have a PEA study at Carangas, and then that'll give us enough runway next year to complete whatever next steps we want to do. And this is kind of an interesting discussion that we're having within the company is what exactly are those next steps going to be? Do we go full feasibility study on the Silver Sand project right away? Do we go into the PFS with Carangas next? What do we do? I think we want to see the results of the Carangas PEA first. Like, we're not going to take our foot off the gas on the permitting side with Silver Sand, but we want to see the results of the PEA study at Carangas, and also we've got limited bandwidth as well, so keep our team focused on that, and then kind of take our heads up in the fourth quarter of this year, and then figure out we end the year with roughly 50 million US. What's the best way forward to spend that remaining money? Because that certainly gives us runway for at least another year, but what exactly we fill in there, we'll make that decision later this year.
Great. Now, shifting to one of your other projects here, Silver Sand has the advantage of producing doré bars, but Carangas looks like it would probably be instead producing a concentrate. Does Bolivia tax export of concentrates like some countries such as Argentina do?
Yeah, great question. So yes, Silver Sand, doré, easy. Carangas, right now, this is part of the metallurgical test work that we're doing, that we're gonna cut that off in about 3 days. We could do a lot more, but at some point you just got to cut it off to get these studies going. Right now, what we're looking at is produce a flotation concentrate, silver, lead, and then a second zinc concentrate for sale. But what we're trading off right now is, does it make sense for us to cyanide leach the silver out of that first silver lead concentrate to produce a doré product? And will the remaining lead deficient concentrate be still have enough in there to be saleable? And that's the question that we're answering right now, because as you flagged, in Bolivia, it's not an export tax per se on concentrate, but the mining code is written as such that you pay an extra 5 percentage points on the mining tax if you produce concentrate as opposed to doré. And so that's also part of and it's not just a pure hold everything else constant, what makes the most sense, but we also got to factor in the tax regime as to what that flow sheet's going to look like. So it's still a bit of a moving target, but between just the raw technical data and then this added complexity from the 5% savings on the mining tax at Corangus. The short answer is we're not quite sure what the flow sheet's going to look like, if it will have a finished product or not. It certainly will have concentrate. Whether we supplement it with the finished product, you'll just have to wait for probably the PEA to see the results.
Great. Now, you had mentioned that Silver Corp and Pan American are shareholders, but given the size of your projects, you've no doubt gotten the attention of major producers. Are you in any discussions, obviously, maybe confidential, but have you been in touch with those companies and maybe with others that might be interested in your project?
Yeah, I mean, as you said, those discussions are confidential, but I will say that it's a small industry. We all know each other. We know our projects. So I think that the projects and the results generate a healthy amount of interest. And I'll maybe just kind of leave it at that at this point. But I think that we've got having these two projects. It's something that we think about and analyze constantly. Is what is the future of our company? Does it make sense to sell the whole company at some point and have someone with a much bigger balance sheet and come in and finance and build these projects? Does it make sense to separate one out, keep the other, and move forward on that? All that stuff is under evaluation. We haven't made a decision yet. And sort of who is there? I know obviously the Silver Corp and Pan American are the obvious suspects because they're on the register, but I think what you're alluding to is correct. They're not the only interested parties in town, given the scarcity and the quality of these projects.
Great. And maybe one transitional question here, but obviously with Bolivia, Pan American has a mine there, I believe, and there are other companies operating, but are there other majors and other companies that you know of that are looking to enter the country in the space?
Yeah, it's. I mean, again, I'd say based on the interest from others, and everyone's curious about what we're doing. No doubt, it's there. I mean, you go back, like Battle Mountain was there, and then Newmont acquired Battle Mountain. Newmont operated successfully in Bolivia for a long time. And Coeur d'Alene, Core Mining was there for a long time, and obviously Sumitomo was there, and Pan American. So I mean, there is interest for sure, but at this stage of the game, nobody's yet firmly planted their flag in the sand in Bolivia yet, other than where we are. But I think a lot of folks are watching us, and they're very curious. They know how hard it is to find new deposits, right? It's the existential crisis that our industry always faces, is where are you going to find your next one? And we went into the country in 2017 and have made two very significant discoveries in a mining country with a 500-year history of mining. And so I think that is certainly generating the attention. I think if you're a mining company and you're doing the service of trying to replace your depletion, I think you have to look into countries like Bolivia. But again, it's been a little bit dormant over the last 10, 15, 20 years. And so I think typically there's you want to be sometimes people like to be a follower. They like to be the maybe the second mover, not the first mover. So I think it'll take perhaps some us to continue to have success and some of our peers, but I could be wrong also. Maybe eventually someone wants to get a little more aggressive and comes in faster. But yeah, no, there's definitely interest. I think you just look at these 200 million ounce silver deposits, and where else are you going to sort of walk in and find them? Like I said, the old fashioned way, by greenfields discovery.
Oh, great. And now that's kind of a tradition, so maybe we do have a couple questions here, and on Bolivia, and obviously it's been timely in the news, and maybe you have some insights beyond what's in the headlines. But what is your take on, I guess, what's happened in the past 24 hours, and perhaps what's led up to that? How is the overall situation economically, socially, politically in the country?
Yeah, so I hate to disappoint you, but on your first question, I don't have any special insights. All I can say is that our team in the country is more or less confirmed kind of what some of the stuff has been written about in the press. I think just stepping back, like when it happened yesterday, our first priority was safety, and so we made sure that all our people were brought into safe areas, return home, kind of be with your families, and don't go out, and very cautious. We had a couple of expats in the country that we found them safe places to go, and so I think that was the initial, like, well, we didn't really know what was going on, and then a few hours later it was kind of like, oh, okay, it seems to have resolved itself, and the brigade left the town plaza, and a new head of the army was put into place, and that was kind of seems to be the end of it. And just talking to the team this morning, it's kind of business as usual in the country. So not really sure. I know there's some speculation about what was the real motive, but at the end of the day, none of us really know. I think for us, the most important thing is that our people are safe and our operations continue to proceed as per normal. And so, yeah, sorry, no particular insights there. But to the second part of your question about what kind of led up to that and what was the backdrop, now that I can maybe give you a little bit more color on. I think the current party, the Moss Party, have been in power since 2005, and there's an election coming in Bolivia in the fall of 2025, so next year. And the two leaders of the Moss Party, the former President Evo Morales and the current President Arce, have been jockeying for power over who will lead the Moss Party into the next election. And so it's kind of got a bit of a Donald Trump, Ron DeSantis flavor to it when they were both duking it out for leadership of the Republican Party. And so we certainly got that going on. And then within the government itself, some are shifting their allegiances to one versus the other, hedging their bets. But I think that's sort of some normal political jockeying, but that's probably the smaller piece of it. The bigger picture here is that, okay, we've had this government now for almost 20 years, the socialist government, and it's unfortunate, but the country is in a challenging economic situation. The programs that the government has put into place that helped a lot of folks over the last 20 years, unfortunately, are on unsustainable fiscal footing, and the country is very much in need of dollars into the country, investment, and new economic projects for to bring growth to the country and help support that some of those programs that are in place. And so that's where we really see ourselves as being in a strong position within Bolivia, is having these projects that, particularly the silver sand, which is more advanced, projects that are very strong and are in industries that the government knows really well, to help move those forward in this environment. And we think that having these projects on the shelf is very very opportune. And yes, there is some turmoil politically, but the economy is a big part of what's driving it. And what we've got within our company is really, I think, the obvious answer to some of those economic woes. So I think we look at it as it is unfortunate in the short run, but the glass half full perspective is all kind of leading to a re-embracing of foreign investment, in particular in the mining sector, that Bolivia hasn't seen for a number of years.
Great. And maybe one little follow-up to that. You had mentioned in your press release with the pre-feasibility study that the government is helping assist the project, I guess, by upgrading the access road. Can you comment on that, and maybe comment on what you've gotten as far as your relationship with the government, and how supportive are they of your company and project?
Yeah, I would say that so the access road is very helpful for those that have been to the project. It takes about 45 minutes an hour, and it's a 30-40 kilometer road that can just bump you along the ways, twists and turns, and you look over the edge. But in certain places, it was actually a pretty good road to begin with. But they've committed to widening it. I think this government, this is what they do. Again, this is part of the reason why they're in a difficult maybe economic situation, is that they're very generous with helping And in this instance, they were willing to widen the road and improve it for us, which is great, a very nice gesture of their support, and we're grateful for that. The question about the broader relationship with the government, I think that's something that we've put a huge amount of work into, particularly over the last year, is really painstakingly going one by one to many of the different actors within the government, both locally on the ground in and around our projects, to the departmental governments, which are like the state or provincial governments, and up to the national government. And it's been this process of taking our investor deck, not our investor deck, our project development deck, and just walking people through what the Silver Sand project is, what some of our issues are, and ways that we can work with the government to make this a reality. And I think over the last few months, we've been quietly encouraged that there's some in there that are really taking the message to heart and understand that projects like this are going to be an important factor in helping to bolster the company's fiscal position. And so I think, the reception has generally been quite good from the government, both at our Silver Sand and Corangus projects. Very different jurisdictions and different people, but both been very healthy, and it actually creates an interesting sort of quasi-competitive dynamic to have the two projects working against each other in parallel, because I think they know that we can only do one at a time. So it also, I think, helps us strategically to have two projects in two different parts of the country.
Great. And maybe a quick comment on Silver Strike. Obviously, you had the discovery there, and it's had some very good drilling results. But from my understanding, you have put that a little bit on the back burner because, as you say, only so much attention you can pay advancing the other projects. But where does Silver Strike stand?
Yeah, it's again a fortunate casualty of bandwidth and market conditions, but we parked it on the shelf early last year. And just given what we've got on our plate at both Silver Sand and Corangus, it's continued to be parked on the shelf this year. I think it's probably going to take we'll need to make a little more progress on both, particularly Corangus. We want to get that PEA study out. And like I said, once we've got that document, have a look at the economics, and then we can do a strategic evaluation of what's next for us, perhaps in the fourth quarter. But I don't foresee, at least any time in the near term here, that we'll be getting back in and drilling Silver Strike. I think we've got critical mass between both of our projects, and I think our shareholders expect us to deliver on advancing the projects, getting the permits, to show that we can accomplish that first before just going out and finding more silver in the ground. Because as we all know, the silver in the ground, it creates intrinsic value, but it's really pinned to the prospect long term of being able to dig it out, like at our Silver Sand project, at $10 an ounce all in sustaining, and sell it at 30. Right, that's really what we're after as a business.
Great. Well, I believe that's all the questions we have for today. And for the sake of time here, I'd like to thank Andrew Williams for presenting today. And thank you, everyone on the line, for tuning in. Please join us next Tuesday as our webinar series continues, with Cobalt Blue presenting on July 2nd at 2 p.m. Eastern Time. Have a great rest of your day and happy investing.